Hello, and welcome to another update video about the DXY. Yeah, on the DXY chart, we are generally quite bullish overall on the dollar, but that's really a long-term view, very long-term. Currently, I mean, this is the weekly view. I don't show that very often, but on the weekly, the price is moving in a price channel. Yeah, you could say an ascending channel. And the price has formed of these 2008 lows, a wave 1 to the upside, a wave 2 to the downside, wave 3 to the upside, and then the wave 4 is unfolding now. That would be an ABC structure, and then another high in a wave 5, which would be very bullish overall. But then after that wave 5 of a larger degree, wave 1, we would see a wave 2 pullback. I don't even think I've got that. That's missing from the chart. Can add that in a minute, but it's not so important. The key is that after this wave 1, a wave 2 pullback should start, and then a third wave rally afterwards. But this will take years to play out. So what does that mean for generally the trend? Well, it is an uptrend, not the most stable one, because this is a diagonal. We can't really trust these patterns, and they are very choppy. We've seen that. Now, what I'm highlighting here is that, first of all, it is likely that we complete this wave 4. This is playing out right now, and that will take a while. Then we probably make a wave 5. A wave 5 can be very choppy. So first of all, we need to complete the wave 4. The wave 4 could become a larger ABC structure as well. Yeah, so it could be this before it finishes, before we start the wave 5. And then the wave 5, which might be a diagonal, so it could be very choppy. What I'm highlighting here is it will take a while to play out, and then we get this ABC structure in a wave 2 after the wave 1 is finished. So see, this is a huge range. My view on the DXY is that for probably a few years, we will stay in a broader range. Yeah, because we are getting close to the completion of a 5-wave move, but we're still in the wave 4, which is always very boring anyway. It could be a sideways correction that will stretch out a bit. Disregard the timeline here, absolutely. But then a wave 5 and then a wave 2. So it's, I think based on this, I mean, Elliott wave tells us that we will probably be in a range for quite some time. Just want to give you that bigger picture outlook. Now we're coming down in this ABC structure. The question will be if after this C wave to the downside, if this will complete all of wave 4, or is it only the larger A wave of an even larger fourth wave? Then we get a B wave and then the C wave afterwards. That's not a question for today. It's just something to think about when we get to it. At the moment, my analysis still suggests that the DXY came down here into the February lows, January, February lows in 5 waves. So we had a so-called A wave to the downside. Then here the B wave was a corrective rally. Here you can exactly see what a so-called sideways correction is. Yeah, it's a so-called flat structure. These are very difficult structures because they make everybody bearish down there, they make everybody bullish up here, but then eventually that's the task of such a flat structure. That's how they are structured: a corrective move up in an A wave, an overshooting B wave, which is also corrective, overshooting to the downside, and then a C wave rally. And then at some point it should be finished. It could be finished at any time. Yeah, we're literally just waiting for a signal that the DXY is breaking to the downside of the ascending price channel, and that could then take the DXY finally after a long time. We've been waiting for this now for a while. Could take it down into the low $90 region. That is still the preferred interpretation here about the DXY. And eventually then coming down, obviously, that would be a 5-wave move. 1, 2, 3, 4, 5. And that would be a C wave, okay? And that could complete wave 4, will take a while to play out. And first of all, the uptrend is still running. So we have a very nice impulsive price channel. Yeah, it's an impulse within the C wave of wave B. And while the wave count is technically full, it can of course always stretch out higher as long as we haven't broken the trend line to the downside. That would be my mindset. We are in the resistance area, yeah, and you can see the price is reacting to that 106, well, basically $107 level there, the 50% retracement level. And that is one key fib level. I wouldn't be surprised if it stretches a little higher into the region around $108.70. It certainly can. And I have to say, and that's what I mentioned in the last video already, we have a pretty full wave count here, okay? It's pretty full. It's just not It just hasn't given us any indication that a top is in place. So what we need to adopt as a mindset whenever an impulse is running, until we're breaking below a certain support, it can always extend. For me, the first support, when I will say, okay, the top is probably in, it's going to be below what I have labeled as wave 4 low, and that's around $104.65. I will already start watching for more clear signals that the top is in place as soon as the DXY price breaks to the downside of the ascending price channel. That would be a good signal. So we have obviously, we have the resistance areas quite well defined. A typical target for a C wave is the 1.618 extension level of wave A. So let's see if we've already approached that. Pretty much. I think I called that out in the last video, that 1.618 extension level, $107.31. You can see how accurately the price reacted. I mean, if it wants to come down now, it is the perfect level. Yeah, it is the perfect level. We had here a bit of confluence between the 50% retracement and the 1.618 extension, and it would be perfect now to come down. Now, if it stretches higher, the next level to watch is $108.71 and then $109.27. Really, this B wave is only getting very unlikely if we break above 111. Now, I'm not suggesting we go up that much. I would be surprised, to be honest. But we also need to understand, without a break below support, we haven't got a top in place. So the trend is clearly up, the short-term trend, and it would be a bit foolish to bet against the trend, but I'm actively watching for reversal signals in this region. The 1.618 extension level, which is an ideal target for that, for the DXY, yeah, for the C wave, that has been reached. So, you know, we've got several levels coming together there, and the flat structure. In a flat structure, the C wave can certainly extend to the 200% extension level, yeah, possibly even to the 2.618, but that is very rare. So I'm not watching for that up there. It would also be above standard resistance. So yeah, I think it shouldn't take too long, ideally, to see a signal there. So you see several markets are coming currently to a key pivot point, a key trend reversal point, the S&P 500 as well, you know, the metals market, the DXY is very, very interesting. Yeah, that's my update about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And yeah, we've also launched our stocks and shares service this week. If you're interested in that, we had a lot of requests, and check it out. The link is in the video description. It takes you to Patreon. You can read through what's included in the different tiers, and it then takes you to Discord, and everything is on Discord. All the analysis of 20 stocks and shares, plus some additional stocks for the higher tiers, plus webinar for the higher tiers, daily market update for everybody. So yeah, and the S&P 500 is analyzed on a daily basis, which I think is the biggest value. Okay, thanks a lot for watching. Bye-bye.